All right, so we had kind of a crazy day today. Um, Going into today, the futures market basically just showed that they were up like 100 and I think 33 or 34. That usually bodes well for us today. But then one of the things that happened today, this is just kind of a weird thing, and it's a lesson to learn for a mistake not to make. It's not a mistake necessarily that I made today, but it's just something that people do, and it just shows you that a lot of people out there aren't really rooted down in their investment strategy and that they're just going wherever the wind blows them. So one of the things that happened today, we started out today basically, kind of where we left off yesterday, obviously. And then a lot of people did is they took the gains. Remember how we talked about, well, I had a video yesterday that I recorded and I talked about it, but then I found out that 5 minutes into the video, the audio stopped working. So you could hear me mouth the words, but you couldn't hear me say anything. But basically, we had some really big gains the last few days, and then there was always going to be, whenever that happens, there's a segment of the market that does profit taking. So they take the big gain, and maybe they're speculators or day traders, or they have options going on. But they basically take their profits, which drives the market down. And it's just a temporary thing. And it's really an area that it's good for us because it gives us an opportunity to look to maybe buy some stocks that are down a little bit so we get a better deal for them. So what happened is they basically sold off the stocks that had gained so much, and they went into tech. Like if you look at Tesla, the price they're at today is crazy. I think they just have somebody put up a target for them for $1,100. So, but you look at Microsoft and Google and things like that, and Amazon. And Amazon's like at 2,600, which is just insane. And so they basically sold stocks in one sector and bought the other one. It's not necessarily that the market's going down or the companies aren't good. It's just kind of where the institutional investors went. And my guess is there's probably an element of high frequency trading where it's not even traders, but it's just computers that are doing it. So basically it went down to a point where it dropped 13%. And then people realized, oh, wow, we can probably get this, at a deal. We're off 13% today. And so it started to go up. And then right here is, right here is where the Fed chairman came out with their report on how they saw things, what their plans were. And immediately the market went up, and then it kind of went down again. So one of the things we see over here is we're always looking big picture, and we always have the same fundamentals on a good day or a bad day. Is overall you see a lot of red here, and it's mainly just because the travel and hospitality stocks, airline stocks, we don't really have many airlines. Were all sold so they can buy tech stocks, which is kind of crazy if you think about it, because you're buying stocks that are already high priced, which means you don't really have much of an ability to gain. I think maybe it's an ego thing. I'm not really sure, but I don't know why I would buy Tesla at 950. I mean, that's just really stupid. Now, I'd buy them if it went from 950 to 500 because they showed they can get up there. By all means, you want to do that, but that's not where things are with the tech stocks. So anyway, the last couple days, I think a couple days ago I was saying, and maybe it was yesterday when the audio wasn't there, but it's like you're almost wishing for a day that the stocks go down because you want the ability to get some stocks at a discount, and then when the market goes up, you just make more money. So that's what we're going to talk about today. So overall, we're still doing really well. We're at about 83,000. We were at 96 before, and we have a bunch of stocks. 3 stocks over 200. 2 of them were over 300 recently. And then the only 2 that are negative are XAN, which is, I guess we should probably open this up. All right, XAN, and I can't pronounce this one. It's a new stock, so I'm learning my peeps. Exantis Capital common stock. So they basically do commercial mortgage loans. So this is interesting. I haven't had one of these stocks yet. They do commercial mortgage loans, commercial real estate debt investments. So they basically package a bunch of commercial loans together and sell them as bonds. And yeah, so whereas a lot of the ones we have are residential. So anyway, this one I looked at, and it was one of the ones I went on bar chart which I talked about yesterday. So we'll just go on today because if I did it yesterday, odds are you probably didn't hear me. So, and yes, I will be going in after the video to make sure there's actually audio in this one. So I went in and there's basically, I have a link set up where it'll look at the biggest drop in the last 3 months for stock. So Luckin Coffee, that's the one where in the Chinese company, and they fake their numbers. And so, of course, nobody trusts them at all. So they're going to be number one for pretty much forever. Hertz is bankrupt. And then one of the ones that came here was Exantas. And then we had, where was it? There was another one that we looked at. Was it AVCT? Yeah, so this was the other one. Oh, nope, let's do this. I didn't mean to do that. All right. So where is that? Exantas Capital, and they were down 67. So I looked at them, and they had some good ratings on Yahoo Finance and MarketBeat and Market Watch and all that kind of fun stuff. The other one that I added on there yesterday was American Virtual Cloud Tech. So we'll talk about them a little bit too, because something happened with them today that just boggles my mind. I don't have an answer. Oop, I'm not opening it this tab. We'll opening it in a new tab. All right. All right. So this one is American Virtual Cloud Technologies Company. This one does. This sounds like such corporate-ese. I used to write these things when I worked in corporate America. Driving business outcomes and innovation. That's just filler words. It's a joke. You would never ever say that to your executive team. They would literally just lose respect for you. Anyway, they produce network communications. Basically, yeah, that's usually software is what they talk about. Network communications, data storage, and usually that's going to be not only like blades and things like that, but they're going to have redundant data storage in different cities, desktops, and servers. Okay, so that's the blade. They do licensing management, and software solutions. So they license their own stuff. They help you license the other software solutions they have. And it's a SaaS company, software solutions and services. They do IT services, visualization, storage, networking, data. I mean, they've said it like 3 times. Whoever wrote this is just, you could fill it in probably 3 or 4 lines if you needed to. But anyway, a lot of this will be for Zoom. So things where you have remote workers, this is a really good stock. And so I looked at this and I'm thinking, wow, we're going to get this stock at this much of a discount. So I went in and put in an order for this because it was so high. I think at the time it was like $230. And I just said, the heck with it. I've never done a market order before. I always do limit orders, but this sucker's going up. So I put a market order in, and today it went up at its peak 180. If you look right here, 180%. And I saw it when I woke up, and I'm like, yes, this is awesome. Well, for whatever reason, the order didn't go through. So I literally had to cancel it. I was going to put 900 shares in basically as a market buy right there. And it didn't go through, which I'm kind of annoyed at because it started off at about $2.95. I guess I would have only got 30 cents so far on it. So 900, that's basically $300. So, in the end, it's not that big of a deal. But those are the 2 that I added to my watch list. Those are the 2 that I added to my watch list. This one and XAN. So, but the XAN one, this one I canceled because it didn't go through. I put 248. It was at 248 at one point. I mean, that's a 4.5 upside if it went through, but I wasn't going to get that. And XAN went through at 380. And so it's not too weird, especially on a day like today, to see it in the negative. Just because you bought it today, you can't guarantee that it's always going to finish higher than your limit price. So if you buy it when it's dropping and you buy it here, it could still drop and you're in the negative for a little bit. So I'm really not too worried about that. The other one that went through just for a little bit was RDI. So we're going to talk about them. All right. Boom, boom, boom. All right. So this one, it's weird. It's just the way they do the charting. It came out where it's basically, I decided I wanted to sell that back at 450, and you're looking, it's about 420. So I did a limit sell on that one. And for whatever reason, the after hours, it shows 450. So this one sold just for a bit. It sold 200 of the 400 that I was going to sell, and then immediately dropped down to as low as 391. So I have 200 of these left right there. And it'll sell when it sells. But anyway, long story short, that one sold. I freed that one up a little bit. A couple other stocks that I was looking at, and we'll talk about them in a little bit. Oh, no, a little bit. What am I talking about? We'll talk about it right now. Let's take a look here. So we'll go WPX and FANG. And so normally what I had done is I would look at my stocks, and we'll get to the upside chart in a little bit, and I'd sort them by upside. But WPX and FANG are way down here. So we have WPX and FANG are way down here. Basically, you know, they have about a 50% upside as we see it right now. But with these, I was looking at them, and they both had 91% buy, 92% buy, and they both looked really good. So I went in to each one of these and took the year chart and realized there's the February 20th, that's what we're looking at, but it was really up a little bit higher. And with the amount of liquidity thrown at the market, and the amount of day traders out there, I mean, they actually had people on TV talking about the fact that, you know, day traders are actually a big part of the market, which is kind of crazy when you think of the size of the institutional investment segment. I don't think this is limited to just going to 1218. In fact, if you look at WPX, well, they put a target at 1250, but if you put it up to even right here, it's at a point where it could still double. And this company basically does the Delaware Basin in Texas, New Mexico, and they also do North Dakota, which is kind of fracking when we talk about North Dakota. So this one might be a good one to look at. So I didn't necessarily put a limit order in, but I did just mark it down because I wanted to at least consider it. The other one, FANG, which is my favorite ticker symbol, is the same thing. So this one, the February 20th price was $78, but I mean, realistically, if you look at this pop right here, it went up to almost $100. So sitting at 50, it's got a double the mark. And this one, they do the same thing. They basically buy oil leases, develop them, explore them, and they do exploitation of unconventional onshore oil and natural gas reserves. That just means fracking. It's a fracking company. So with a 92% buy rating that we have right here, that's one that I at least want to consider going forward, but I don't really have a position, or I at least want to have it in the front of my mind. So, and I could put a little marker here, but if it doesn't show, if it shows so far down, I might miss it. So, because I'm usually looking at the top one. So, as we look at today, I basically updated this throughout the day, but the stock prices have been flying so much. It's just, we'll update it later, but this is a good estimate of where things are at. So Yuko is up top. We're positive in that right now, and I think that's going to go up when you start to see demand stocks about oil, transportation, and you see the price of oil. I tell you what, if the oil price goes over 50, this sucker's probably going to explode. But I have XAN up there, or XAN, I'll just call it that. So I have a good position in that. AVCT was the one that I was looking at before, and it's still pretty good. I'm not sure if I'm going to redo this or set a limit order really low, like if it goes down to like 280 or something like that. But I'll take a look at that. But after hours, I am going to consider this and see if I can get in on that at a certain price, because it's hard to really get one at that number and just not owning it. I was looking at Houghton Mifflin. That's basically a textbook company, and that one's up there pretty high. And I think part of the reason is if people are doing digital school, then it's hard for them to do books. And I do know that they have ebooks, but I'm not really sure kind of where that goes. I'll have to do a little bit more investigating into that. Beyond that, I was looking at Viad, which had been doing had been setting itself up pretty well right now. And it has a $42 price target, even though the February 20th price was $63, so we're looking pretty good on that. And then as we go down, Soho, which is Southern Hospitality, I want to get that at some point. But I'm not going to get it at 1.6. That's just not going to happen. Beyond that, I think we're set up pretty well on our holdings. So the big picture, without getting into the numbers, is just saying, look, it's one of these things. Basically, my position went down a little bit just because, in fact, let's go over here. Just because everybody went from the hot stocks and hospitality, they took their gain and they went to tech. But tech is one of those, it's like the cheating girlfriend. It's the hot girlfriend who cheats on you. It could be one that she is really great. You want to hang out with her, but after a while you realize you're just not going to make a whole lot of money. And depending on the volatility, if those stocks go down, you got to keep in mind that the federal, that the DOJ has an antitrust investigation going against Google. And my guess is it's probably against Facebook, which includes Instagram and all that kind of fun stuff. And maybe some other people. So buying into tech right now is probably not the smartest idea. You don't have much of an upside, and you have Bill Barr is actively investigating them. And if they file antitrust charges against them, you're going to see that stock crater. And my guess is they're going to come back to here if they're not going to do that already. So long story short, we have some fickle people moving money around. It has no bearing as far as the stocks go. And we want to stay close to where our main goal is we want to keep this cost basis down as low as possible. And we want to have ones either that have really good ratings like we see right here, or we look at companies that are well positioned basically within their industry. So we look at Eldorado. They're going to buy Caesars, so they're going to be a dominant player in Vegas. Let's see what else. Invesco, they're a huge finance company, so that would be one that we would look at. GNC, I still think is going to get bought out. But they're doing pretty good for us. And then you have your biotech companies, which are never going to crater, but in this market, I think one of them is going to pop. Maybe one of them is going to pop and three of them don't. Who knows? I don't necessarily know about that. I personally think that Brian's ATM up here is going to pop at some point, but that one's been a little bit slow. If I have to free up some money, maybe that's the one I free up, but we'll take a look at it right now. So with that being said, projections, we're still on pace for 278. We don't have any limit orders set up right now. I'll take a look at that tonight. And then I did May. I looked at May basically, and I think this was part of yesterday, but nobody could hear me. We have our beginning of the month, how many shares we bought, how many shares we sold, right there, and then our end of month. So we basically finished up with a gain of 47, which is really good when you consider March was 30, April was 42, and this is not April anymore. This is May. That's what happens when you copy the worksheet. And we're at 47. So in June is going to be way higher. So great news is there's tons of money to be made. You love days like this, even though you're saying, well, how do you love days like this? You went down 7%. Well, I went down 7%, but there's going to be some opportunities to reshuffle my portfolio, lower the cost basis, or buy some stocks that are even better positioned than before. Because when stocks were going up, it seemed great, but in the back of my mind, I'm thinking, I can't buy anything. Why would you buy anything when the prices are going up? So, all right. So with that being said, let's take a look at the futures. And again, it's super early in the day right now, so usually these don't move a whole lot. All right. So that is from today because the stock market was down today. And that is from today. So these really don't mean a whole lot. Again, remember how we were talking about they moved from the travel and hospitality ones, those were pretty much in the Dow, to the NASDAQ, which are tech ones. That's why you saw the NASDAQ go up and this go down. So this part, one thing, I don't really pay too much attention to it, but what they're saying here is that if Biden gets elected president, they're gonna undo the tax cuts, and corporate America doesn't like that, and the stock market doesn't like that. And with the president's current and they're very current. They're going to be short-term, but very current struggles on his favorability ratings and some of the polls that are coming out. I think that's part of it as well, but I'm not really too worried about that. Again, our goal for these numbers is keep these cost bases down as low as we can. And then this number is going to grow as, our goal is to get these numbers to where we want them to be by the end of the year. So we have like 7 months to go. We have plenty of time. And this number just a couple days ago almost broke 100,000. So if you're not in the market right now, get in the market. If you haven't opened up a Robinhood account, make sure you do that. There's a link in the video notes where it will basically give you a free stock if you do that. And then there's also a copy of this document, so you can use it, copy it, play around with it, look deeper at the numbers, and steal it if you want. I don't care. So, but I'm always making improvements to it. Other than that, I will see you tomorrow. To get more information on the sales cheat code, go ahead and click on the subscribe button below. Also, down below in the video description, down there, there's a link that takes you to our website that gives you additional content, some additional freebies that we have, and gives you information on some programs that we have that have been proven to help people to make sales easy so that you can make the kind of money you want, live the lifestyle that you've always wanted, and not have to struggle in the process. And what might be the coolest thing of all is you don't have to put much effort into it. It truly is a cheat code that most people don't know about. And it's a cheat code that can change your life today. So click on the link below and let me help you start to experience these results starting right now.